FP&A and other departments. Another important thing to know. So you should know how are different departments linked. How is FP&A department dependent on other departments? How are other departments dependent on FP&A department? So that you can create a whole picture of how the finance process in a corporate world looks like. So you know AP department. AP stands for accounts payable. Accounts payable, they deal with payment processing. Now I've used a very simplified line here so that I can fit all the departments into one slide. But obviously, whatever definition is included here, the department is not limited to that. A department does much more than what is mentioned here. But this is mentioned here so that you can get a sense of what all these departments do. So accounts payable, as the name suggests, deals with payment of invoices, dealing with vendors, vendor management. Accounts receivable, they deal with all the cash management, bit of treasury function as well, and deal with applying the invoices and applying the payments and applying the remittances against the invoices, chasing the potential customers for money and all those things. Accounts payable and accounts receivable are called sub-ledger teams. Why? Because they mostly work on sub-ledger. Okay, I hope you know the difference between a subledger and a general ledger. Just in case you don't know, I'll just try to explain it in brief. So subledger is something that holds a massive number of transactions. So in case of picture something, an AP department in a big organization, in a big corporate company, uh, the department may be receiving hundreds of or maybe thousands of invoices in a day or in a week. Okay, now it may not be manually possible for all those invoices to get entered to account, to to be moved into payment list and all those things. So this is where an ERP, a subledger, comes into play. A subledger normally records the transaction of a mass number, and this records these entries are ultimately moved into general ledger. General ledger is your main ledger. Okay, and so this is a subledger. General ledger you already know. General ledger, you can make an entry directly into general ledger, or it can be through an interface from subledger. So subledger can be in accounts payable, can be in accounts receivable, it can be with the capital team also, it can be with the tax team also. It depends on the nature of the organization. But ultimately subledger, there are a higher number of transactions recorded which are ultimately moved into general ledger. Record to report team deals with GL entries. So they normally record entries directly into general ledger. And what kind of entries they do record? All those entries which are missed by accounts payable or accounts receivable team. Okay. So what are some of the entries? Accrual entries. Now accounts payable may not record accrual entries because they deal only with the invoices that they must have received. If they have not received any invoice for a particular month, they'll not record it. Then it becomes the responsibility of record to report team to see, okay, these entries are missing. That means they need an accrual. That's how record to report uh, post an accrual. Now, what does FP&A team do? All those entries which are recorded by these streams, FP&A team pulls out a data. They retrieve the data of these entries so that they can study these entries, do the analysis, because they are the actuals of the current period. They compare it with budget numbers, they compare it with forecast also, they compare it with previous year also, and submit the report to the management on the variances. Why are we under the budget, or why are we over the budget, or whether we are favorable, not favorable, how are we performing? Okay. Now, rest of the departments, I hope you've heard of them. SOX and internal audit. Again, all the big organizations have the SOX and internal audit team to ensure that they're compliant. Tax team, they deal with tax compliance, tax payments, tax calculation, etc. Controllership team, they work closely with CFO. They ensure that the company is adopting and following the correct accounting standards, accounting policies, etc. Okay. Treasury, they ensure that the funds of the organization are used effectively. So an organization may possess a large amount of fund. They may want to use it as an investment. They may want to purchase an asset. Whatever they may want to do, they would want to do it with a view to get the maximum return, and that's where treasury team comes into play. So now you know what all different departments do, how is FP&A team linked with them. In short, all these AP, AR, record to report team, they perform a very important function. They ensure that each dollar earned by the company, or each dollar spent by the company, are recorded accurately and timely. And FP&A department, they study whatever has been recorded, and at the same time they decide on where the next dollar would be spent. Okay, when